It's Jim Czek. You're watching Kelowna Now. We're here with the REMAX Report with Jerry Redman, who's the sponsor of the show. And we have a special guest today. Do you want to introduce him? Or?
Yeah, we've got Marlon Lasik from CIBC. Marlon's going to come in and chat with us a little bit about what we talked about last time about the Bank of Canada rate announcement we got yesterday.
Marlon is a mortgage broker. Mortgage specialist. There you go. And big sigh of relief for a lot of Canadians. At least we're going in the right way now, right?
Yeah, definitely. Trending down, which is good, which we've been waiting for a long time.
4 years.
Yeah.
First rate cut in 4 years.
March of 2020 when COVID happened was the last one.
It's, I think a lot of Canadians have, not enough, I would say, but at least the right way.
Well, it'll definitely help, and if it keeps trending that way. But in terms of numbers, for an average variable mortgage, it's about $15 per month savings per 100K. So, it might not sound like a lot, $75 savings on $500,000.
Yeah.
So
$150 on $1 million.
Yeah, it's not bad. On line of credits, it's a little bit more. So anyone that has like a HELOC or like construction loan, obviously a little bit more, $20 a month. But
any movement in the longer term rates right now?
Not right now. So hopefully trending. Bond yields are down. So hopefully in the next couple of weeks, we might see a bit of a break on the fixed rates as well. So
I imagine right now, kind of like a lot of people will probably look at a variable rate and hopefully that things start trending down and then lock in something in the longer term.
Yeah. I think over the last 6 months, a lot of clients have been looking at either variable or like probably 3-year fixed has been one of the most popular. Just 5-year, just a little bit with rates. They have come down a little bit in the last 6 months, but not worth locking in at 5% for 5 years. So, and
I think Jerry and I talked last time. We were kind of anticipating it was going to happen.
Yes.
To be prepared in the market, to make sure like you're getting approved, pre-approved, finding the houses you like, so you don't end up in a bidding war when the market gets hot, stuff like that.
Interesting you talk about hot market. We've had a lot of conversation last week in the office about how many multiple offers we're seeing right now.
Oh, wow, already, eh?
Which is strange because we are seeing a lot of people that have been anticipating this rate cut. The markets always build this stuff in a little bit in advance. Some of the rates have come down a little bit. And the buyers are saying it's time to jump in, and that pent-up demand only stays on the sidelines for so long.
Yeah, I imagine with this rate cut, people are going to say, okay, it's going in the right direction. If I do variable, I'll probably, I watch a lot of stuff on Bloomberg Net. I think we could see another couple of 0.25s. I think we had a July meeting, and then there's a break till September, and we'll get a couple rate cuts this year, and then maybe we'll see what happens next year. I think some of the bigger investment banks in the States are calling for like a 3% or something like that over the next year and a half or something like that, right? So
anything in the threes would definitely be a game changer.
I think it helps a lot of people take some of that stress off of them, right? So yeah.
There's a lot of pressure. There's no doubt about it. I mean, if you got that 5-year money coming up for renewal in the next year or so, that you've got that 2.5 or 3% 5-year money, and you're looking at jumping into 5%, 6% money, it makes a big difference.
Yeah, I talked to a friend of mine, and then she had bought a property like a 2 years ago build. It's just about near completion, and she qualified at that time, like would have qualified, and now she doesn't qualify, right? So now she's having to look BC lenders, or see what I mean?
Lots of that with the new construction where
she has that deposit in there though, right? Do you know what I mean? So she doesn't complete. She loses the money, right?
I know I have seen for a couple clients buying, for example, on the East Coast, we've had some developers actually reach out to the clients and asking for an approval letter, just being making sure that they're still approved, that they're coming up for completion in the next 6 months. So,
but if you don't get approved, then you don't get your money back.
No, they would lose their deposit if they walk away. I know with CIBC, the one nice advantage is when we do approve the clients and we do everything up front. So we do the appraisal, get them approved. Yeah. That approval is held until completion, which is nice. Okay.
Yeah. So that's a good idea.
Makes it nice, but you still end up with a lot bigger payment than you were planning on.
Right. Yeah.
When you bought it 2 years ago.
Who needs to eat, Jerry?
You know what? Some of us could eat. Some of us could eat less. There's no doubt about it.
Who needs to eat?
Definitely, it's a challenge, and the interest rates have definitely
contributed to inflation too.
definitely contribute to inflation, and they definitely contribute to, you know, people having to make decisions about pulling in other things and stopping other luxuries in their life that they do, and just to keep paying the mortgage, which is, you know, kind of critical.
Totally.
Any advice you have for people that are out there that are looking to get pre-approved and like they're starting to shop, either from the mortgage side of it or from the real estate side?
Just do your due diligence, like go get pre-approved, not just for like knowing budget wise, like because a lot of people do those calculators online, and I always tell people, especially like when we have our office meetings, like those calculators are great, but a lot of people are not, they don't put their true income on there, or they, you know, they add in like bonuses and stuff. So if whoever they're working with, like whichever professional, get a pre-approval, get a rate hold in place, so that way if, you know, if rates do for whatever reason bump up, which I don't think they'll do, they're locked in. And then if rates come down, then obviously they get the lower of the two. So
Right.
Yeah, pre-approvals are really important when you're out shopping too, because it's actually quite surprising how many offers in the last while have been collapsing because of financing, right? They think they're approved and ready to go, and they get in there and actually do it and go through the full process and find a skeleton in the closet that they didn't put into that calculator online, and all of a sudden going, wow, I didn't get my mortgage. So that's where the pre-approval, and we're starting to see a lot more people on the listing side asking for that. You know, what have you got for a pre-approval? How far did you go? Because there's different levels of pre-approvals as well. There's pre-approvals you can take to the bank, and there's pre-approvals that are, providing, you know, everything you told me is true. So what level of pre-approval did you really get? Because it is important. The last thing you want to do is find your dream home and then not be able to buy it because you were mistaken on what you're really qualified for.
And utilizing a mortgage specialist is a good idea too, just in some of the things that you can do, like your RSPs, make sure you put in like 90 days, I think 89 days,
90 days minimum.
90 days, you have to have it in there, because then you can pull that out and get a little bit of tax money back too, right, to increase your down payments and stuff like that. There's the first time homebuyers thing too. I don't know what.
There's a lot of different like programs and incentives, but just like getting to know like what your number is crucial. And like Jerry said, like I have seen a lot of deals where people are scrambling, calling last minute, being like, hey, like we need financing, or hey, I was pre-approved for this amount now. And I've had to make those phone calls before where it's not the greatest news.
So you kind of live on your phone, right?
Phone and iPad.
I've golfed with this guy, just making deals on the golf course. There you go. Always working, right?
Yeah, mortgage brokers, realtors, we're always out there, mortgage specialists, and that the key is really getting a specialist. You know, a lot of times you can go even into your bank and talk to one of the people at the bank that's not their realm. You're not really getting the proper advice. Talk to a mortgage specialist, a professional in the business.
And then when we talk about the market in Kelowna, I did see a report saying that, I think it was RBC, and I'm not sure, that they're expecting a 9% increase in property values in this coming year.
Well, I haven't seen that report.
Oh, okay. I thought I seen it across the line just to...
And that might be a Canadian-wide report that they're forecasting. And you know what? I think it's interesting because we definitely haven't seen the reduction in prices over the last year and a half that all of our buyers have been waiting for. Yeah. You know, the buyers have been waiting for the price meltdown, and they've been waiting for the mortgage rates to come down. Well, we're starting to see the mortgage rates trend down, but the average house price really hasn't changed dramatically in Kelowna in the last
Kelowna being that
months.
Desirable area, though, too, the central Okanagan, kind of more insulated from price drops, right, than certain areas like in Edmonton or something. I think Edmonton scored like one of the lowest in, or best value, I guess you would say, right?
Well, the hard part with Kelowna is we don't have the land mass. I mean, you start to look at cities like Calgary and Edmonton, and they go, geez, we need another couple thousand homes. Boom, they get to move their city limits out a little bit and subdivide a bunch of land, and they do it. We don't have it in Kelowna. I mean, when's the last time you've seen a new single-family subdivision come in Kelowna? Some on the west side.
Like Wilden's the only one that's really has some land left to kind of develop, right? And those lots are a little pricey. Yeah. But, I mean, those are higher-end homes, though, too, right? So you had one in, last time we did a show, we had a beautiful home. It was a 2+ something, right?
2.7 million,
right?
Yeah. So, I mean, Wilden is a beautiful neighborhood. And there's still lots up there, but you are starting to talk $500,000 for a lot. And with the cost of construction today, you know, you're having trouble building a normal family house for probably less than $1 million, $2 million, $3 million nowadays, right? So it's expensive.
So last time we did the show too, we did a little education on average price and then benchmark price and all those kind of things. In these multiple offers that you're starting to see, is it in that benchmark price home, like the lower end, or where are we seeing these offers?
Yeah, I mean, you're kind of seeing them everywhere right now. I mean, there's buyers for every segment of the market, and it really comes out to, you think about everyone thinks, well, I put my house on the market, and if I get an offer in the first week, I probably priced it too low.
Right.
Well, the thing that a lot of people don't really realize is the buyer pool, they're on the market as well. So we only see the homes that are on the MLS because that's what's there on there. But they don't know that every realtor is probably working with 2 or 3 buyers that are actively looking right now. So whenever a new home that's well priced in today's market terms of pricing, that if you don't get an offer in your first week, you've exhausted the buyer pool of people that are shopping now. So then at that point, from there on, you start having to look for the new buyer that comes into the market. So if you don't get that activity in the first week, your home's not priced right, or you've got something that nobody at that current time is looking for. So it really comes down to just being at the right price with the right product, and there's somebody out there looking for it. There's more buyers out there than most people think there are, by our numbers, but a lot of the stuff on the market isn't at today's prices. I mean, the average house price hasn't changed a lot. We talked a little bit before, but the average house has. You're getting a little bit more house for your average price than you were before, because people start getting used to spending that number and seeing that number, but they'll get maybe a little bit more square footage. They make a little bit more updated house that's come down. So that's where we talked about average price, median price benchmark. Is it's just a number. It doesn't really tell the true story until you get out and do your shopping.
Right. You got some market stats you want to talk about today?
Yeah, just some quickly, months of inventory. So basically, if no new houses listed today, we have about 8 months worth of inventory with the amount of homes that are being purchased now. Which is up, which is leading a little bit more to a buyer's market, but it definitely gives a lot more choice for the buyer to be able to see different homes and things like that. Average house price, compared to last May, we're down about 3.5% to $1,057,000 from $1,095,000. So not a big drop. With our median house price, which is down from $990,000 to $985,000, which is less than half a percentage point. So they're staying pretty consistent. What's going to be really interesting to see, I think, this month starting now is that last year we had a pretty decent 6 month. It was normal, the uptick all the way through, but in June that trend started down, and it trended all the way down last year to a very slow last 6 months of the year. We still had a bit of an uptick in May like we did last year. So it's really, I think, going to be interesting to see with this rate cut, to see if we do the trend down like we did last year, or if we break through that trend and continue an uptrend in June. So I think that's probably what's going to happen, is we're going to see that uptick continue. Listings are up. We're up to about 20% more listings this year compared to last year, which I think is great for the buyer coming into the market and more choice. You're not having to battle for everything like you did a few years ago. Yeah. But we are starting to see those multiple offers on well-priced stuff. So,
and in new developments in Kelowna, we haven't seen what we've seen in the past, like say 5 years ago, where we've seen a new development kind of pop up every week. We haven't really seen a lot of new ones added, but the current ones haven't sold out yet either. Like Movala still has properties for sale. Aqua still has properties for sale. I think Westridge still has some properties for sale. One Water, is it One Water or Water Street? I think Water Street, they have some properties for sale because those used to sell at like 24 hours.
Yeah, when they first got listed.
That party's ended, unfortunately. And I mean, we had that same, it happens all the time. I mean, it happened in 2005 and 2006 when the market was crazy. Those projects were selling out in a day. And 2008, it was like they're all scrambling going, it's too late. But, next, when we meet in a couple of weeks, we're going to actually bring in 2 developments that are going to showcase their developments and talk about some great interest rates that they're able to provide at those developments.
So they're going to buy down the rate a bit?
Yep.
Nice.
Yeah, they're buying the rates down to just under 3%. So,
wow. So that'll encourage some buyers for sure.
Yep. It just gives you that assistance to, wait out these rate reductions and get them in advance.
Interesting. Yeah. So have you seen any because of the Airbnb rules, have you seen any of the Aquas and the Cabans, people get nervous and want to sell their property now because they thought they were going to Airbnb them?
Yeah, there's definitely nervousness out there. There's still, I think, a lot of people hoping it might not happen, but there's people selling and, moving on, and there's people that are going to rent them. And, there's no doubt about it. There's a lot of uncertainty about it and people trying to figure out what to do.
Because Brooklyn, which is downtown there was a lot of Airbnbs in there, and there's only 5 that are licensed now out of the whole building, right?
Yeah.
And That's a big difference from, because that was almost like an Airbnb building. It was like
It
a
was.
hotel basically, right? My son lives in there, and it was kind of, he said, just like,
I think that was the last building to be like grandfathered with the short-term rules. Because I remember when we were helping finance, like people are just like snatching Brooklyn up.
yeah, some people are getting like buying 10 of them and stuff like that, right?
Yeah,
So,
but the problem is the grandfathering doesn't count anymore with the government, the provincial rules, right? So it definitely makes it a challenge. There's no doubt about it. And there's going to be some hangover from it, I think, for sure, when it really comes into effect and people really truly realize that, oh my God, this has changed dramatically.
yeah, so again, I think the advice would be to just be prepared, I think, right? Because I think, like we have this first rate cut, which is great for many Canadians. And I think for people to even have a mortgage or whatever and start to think, oh, I can get back into the market. But if we get a second one, that'll even be a bigger kind of like movement towards it, right? And then another one. And if we start coming down in that 3 range, I think, it's back
3 would
on,
be
right?
nice.
Yeah, for sure. And we've seen that even with the leveling out with no rate increases, the buyers got more comfortable as that kept going on and on without the cuts. Now we get the first cut. That it's definitely going to have people make up their mind to make a move because, people will delay their moves, but they won't cancel their move, right? So, and that's where we are now.
We're starting to see the rate cuts across because I think Europe cut today too,
Yep.
right? And then I imagine the Americans might be a little slower to cut. They might cut, I think they'll cut sometime this year, but I think they'll be a bit slower than that election year. They're probably trying not to do too much, right? But how are you seeing for business though? Like, because obviously it must have gone a little quiet, and are we starting to see some activity come back for yourself?
Myself personally, like, seems like it's pretty busy. Like purchases in the last couple of weeks are starting to pick up. So I think beginning of the year was more like either people building, people like construction financing, still doing a lot of those, a lot of refinances, but a lot of ports. So like people where they're selling, moving, and then trying to keep that lower interest rate until at least like whatever, 24 or 25, most of them. So, or sorry, 25, 26. So.
Right. Anything else in the stats you want to hit on today?
No, I think that's really about it. You know what? Well, I guess we would talk about average days of market. We're pretty consistent. 46 this month to 40, or May compared to last year was 46. A little bit up over 58 compared to 48 the year before overall for year to date on it. But everything's, relatively staying fairly consistent, which is not what a lot of people were forecasting or thinking was going to happen with these interest rate, the climb that we did and the slowdown of the market. That's what we get when we're to the size we are now. I think we're a desirable enough spot that we keep a market going here.
If somebody has $1 million, where's the bang for their buck in Kelowna? They're flexible. Is it in the condos, townhouses, his house?
I think you know what I mean. It's so different for everybody. I mean, it really depends. I mean, I think you can find a pretty good deal. I mean, just saw a really good unit in the Madison sell for like $1.2 million that was 2,100 square feet, 2 parking stalls, big deck, right? No view out of it, but so there's good deals, but not everybody's going to move into a condo either, right? So you just really need to, again, that's where it gets down to work with a professional that will help you figure out what you really need to accomplish for your goals and your family, and they'll help you direct you to the right spot to go.
Because the cost per square foot when you talk about those condos had been kept escalating. Because I know when we bought SOPA a long time ago, it was like $390 a square foot, and then I think Brooklyn was in the $590s, and then Aqua was in the $1,300. You know what I mean? Like, and they just kept going up. But that Madison sounds like what's that, about $500?
It was if that Madison unit would have been with a lake view,
facing the other way.
Some of the new buildings, well, it was facing the right view. It was just low down, right? So, but had it been in one of the new buildings, that would have been they'd have been asking $3 million plus for that sort of square footage. You just don't get that big of a condo. It was 3 bedrooms.
Yeah, 2,100 is big for a condo.
Oh, it's huge.
It's huge, right? Like, because that's usually like less than half of that, right?
Yeah.
Like
so I thought it was
like 800.
Great value for a downtown condo.
Anything you want to leave people with?
Stay patient. Well, the nice thing is, like, for a lot of people with like adjustable, so obviously with variable mortgages, there's 2 options: adjustable rate where your payment lowers with this rate cut, which will be nice, and then with others where it's variable rate mortgage where the payment stays the same, but
you're just paying
amortization will go down.
Yeah.
So if people check their statements, they'll see that.
That's good. Yeah.
It's a win for sure.
Totally.
A good
It is
start.
definitely in the right direction, and we just have to keep it going in that right direction, right?
Yeah,
So
for sure.
I know that a few, even Premier Eby was cheerleading it, and
Yeah.
so I think that the pressure needs to be on them to continue to move those rates down.
Yeah, too many people are, we're one of the few countries that actually uses mortgage as our part of our inflation data. Not everybody does, and that's one of the reasons why our inflation rate hasn't come down as quick as it should.
And Canadians are hit a lot harder than Americans on these rates because a lot of American mortgages are 30 years, right?
25, 30-year terms.
Yeah, so they're not really, but a lot of Canadians are using either variable or short-term mortgages, right? Like short-term. So, and a lot of them are starting to renew.
Well, that's the other reason why there's a lot of non-movement in the U.S. is because their 30-year mortgage, that's their morgage rate for 30 years. So if you've got a low interest rate, you're not moving and giving up your mortgage right now. So that's why there's a lot of stability or a lot of non-movement in the U.S. market is because those rates are theirs for 30 years. And, the Americans can't really figure out what do you mean you only get your mortgage rate for 5 years? How do you plan?
Why is that like that?
I don't know. I've had that question from, I just dealt with 2 American buyers, and they were kind of, they didn't understand how it was like, okay, what kind of term? So, typical 5-year. I said the maximum here is 10-year, but I wouldn't recommend it now, just too high.
But is it that the banks aren't really offering or nobody's really offering it? Or how do they get like a 30-year deal down there? Because I imagine it would be attractive if it was low enough to a lot of Canadians.
Yeah. A couple of years ago, I would have definitely locked into a 25 or 30 year at 2%.
It used to be, you used to have a mortgage like that in Canada, 30, 40, or probably longer than that, probably 50 years ago now. But I don't know why it changed, or do you know the reason why they ever went to the short terms?
It would bring stability into the market, I think, for sure, right?
And the prepayment charges here as well, like all the lenders, they charge huge prepayments, and down there they don't, from my understanding. So.
Well, there you go. We learned something today.
Definitely.
And we're going to get some developers in here to talk about their projects.
Yeah, a couple of projects next week or 2 weeks from now.
2 weeks from now. And that's the REMAX report for this episode. Again, Jerry is the sponsor of the show and the owner of REMAX Kelowna.
Thanks, Jim.
And thank you to Marlon for coming in. And
appreciate you taking the time, Marlon, to share your experiences with us.
And most of all, thank you for watching Kelowna Now.
Thank you.